The bill I'm about to sign is not just about today, it's about tomorrow. It's about delivering progress and prosperity to American families. It's about showing the American and the American people that democracy still works in America.
The U.S. economy right now is in a stronger and a more resilient place than any other major economy globally to actually navigate the global challenges that we face.
I will say that it's one of the happier moments of my climate work. I have two things that excite me about my climate work. One is when policy gets done well, and this is by far the biggest moment like that.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Double digits. UK inflation rises more than 10% in the highest levels in 40 years, putting more pressure on consumers and more pressure on the Bank of England. No time to relax. Germany's energy regulators as a nation may not have enough gas to get through the winter, even as reserves fill faster than normal. Uniper posts a €12 billion loss. And to meet the new boss, we're in Vienna to speak with OPEC's new Secretary General in his first interview since assuming the role. Haitham Al-Ghais talks oil markets and the biggest challenges facing the producer group with our Manus Krani. Now, this is a picture for markets. Interesting to see the same pattern, certainly at the beginning of the week or at the beginning of the day, with the European stocks actually pretty much flat, but a bit more pressure on some of the U.S. futures. Overall, the U.S. 10-year yield at 2.87, of course, a big one we need to look out for is also the inversion between gilts. The 2 and 10-year UK market giving us the strongest indication. It's actually the most inverted since 2008, the financial crisis. That, of course, points to a recession. The Bank of England had already warned of a recession. Euro dollar 101.67, and then we're looking at Brent at 92. Yesterday there was talk and concern that we could go below $90 because of what's going on in China and an impending recession. We're still at $92. Now, the European map, and again, we are getting a bit of breaking news, for example, from Uniper, down some 8%. That's putting a bit of pressure on some of the German markets. We're also getting a couple of smaller companies, but because of shareholder dilution, for example, Cineworld down 30%. Market flat here in the UK. The FTSE MIB over in Italy gained some 0.3%, and then we have the DAX and the CAC actually looking at a reversal now in the red. Now let's get back to the markets, and the White House's chief economic advisor says, of course, there's a lot of uncertainty at the moment.
Obviously, there's a lot of uncertainty in the 6 to 12-month forward horizon. We're still very focused on some of the global threats that we face, including the energy markets and the second-order implications of the war in Ukraine. But if you look at the steps we're taking and the policy actions we're taking, I think it's certainly the case that the Inflation Reduction Act, the CHIPS and Science Bill that we passed just a little while ago, those are going to help. They're going to help meaningfully in this transition.
Now, to talk markets, we're joined by Swetha Ramachandran, investment manager for Global Equities at GAM, and Lynn Thomason from our markets team. So thank you both for joining us. Lynn, if you recap, it is what, a little bit of a freak out in the morning, kind of looking at Asian stocks, and then usually by the end of the day, we kind of rebalance.
Yeah, and I think this morning you're seeing markets flat. I think that sort of speaks to the fact that a lot of people are on holiday this week. Things are very slow, and perhaps a little bit of a pullback in the U.S. trading after the big gains we saw last week.
Swetha, what kind of data point are you looking at? I know there's a worsening sentiment across the board for consumers, but also for money managers. Does that point to something uglier as we get into the winter months?
Well, at the moment, as was correctly pointed out, liquidity is very thin in the markets. So I think it's dangerous to maybe get a longer-term gauge for where they're headed once we all come back, say, in a proper back-to-school manner in September from what is currently happening. That said, the incremental data points that are coming out, for example, UK inflation this morning, et cetera, all of these will definitely shape sentiment as the weeks go on, particularly heading back into that key fourth quarter.
Swetha, are you expecting actually Jackson Hole to be a huge catalyst, or will the markets try and front run what we'll hear from the Fed officials?
Yeah, I think the path of the Fed tightening is pretty well understood by the markets at the moment, in that it will take, they're pretty much doing whatever it will take to get inflation under control. And that path of tightening now, I think, is well priced into market expectations. So I don't think that will necessarily be a huge catalyst on its own unless the signaling is substantially different. All of the economic data coming out on employment, on the strength of the economy suggests that it probably won't be.
Lynn, I mean, do we also need to make, maybe take a more simplistic approach and saying, like, inflation in the U.S., even if it's peaked, it's going to take many interest rate rises from the Fed to bring down to their mandate?
Yeah, I think that's certainly what the bear case would be right now, that the trajectory is still higher. We're not in a position where central banks are going to start pulling back on interest rate rises. And like I said, the Fed is still going to be in a do whatever it takes mode.
I know there's little chance that actually inflation leaves as fast as it came because of these underlying pressures from energy. But how difficult is it to carve out the pent-up demand post-COVID that kind of blurs maybe some of the data right now?
Yes, exactly. And we have this huge reorientation that's happening away from goods, which people had piled into during the pandemic, into services, which had, of course, been supply constrained. And that's also causing a lot of inflation at the moment. I think what's key to notice is exactly how that reorientation and will affect the core goods demand. And we're seeing signs, for instance, from a bottom-up level from companies in the U.S. that are clearing inventory, for the big box retailers, the likes of Walmart and Target, for example, that are suggesting that that is also going to push down inflation as they mark down heavily in order to clear stock. But what is not clear is the path of services inflation, which, because of labor constraints as well, remains quite elevated.
So, Lynn, what are you looking at? I mean, I know we'll talk, about UK inflation, which was the kind of the big number that was not surprising, but then you see that 10% inflation print, and it's a bit worrying. Is there anything else apart from China that you're looking at in the next couple of weeks to give us an indication of what the market does?
Yeah, I think obviously the big news, in our area today is the UK inflation numbers, and then what does that mean for the BOE? I think we're already today starting to see traders reprice expectations for BOE rate hikes. We just had a hothead saying going to be 200 more basis points of hikes. So clearly, traders are positioning for the BOE to take some really tough action to try to bring down that double-digit inflation.
And Swetha, what's your take on China? Again, China was one of the big outlier calls, or certainly one of the biggest surprises. We knew that PBOC and policymakers probably weren't going to do enough, but it was shocking to just see that token, like 10 basis points move.
I think this will be the first of further such moves, given that the deceleration of the economy has been sharper than expected. The property market slump seems to be gathering momentum. Transactions are at an all-time low. And of course, property is a big driver of the Chinese economy still. Domestic demand remains quite tepid. And that pivot that China has been trying to implement, which is to move towards a dual circulation economic growth strategy and boost domestic demand, has not been helped by these sort of rolling stop-start lockdowns that the country has seen. So I do think that rate cut, as unexpected as it was, is presaging further such moves in the months to come.
All right, so thank you both, and both stay with us. Swetha Ramachandran, their investment manager for Global Equities at GAM, and Lynn Thompson also staying with us to talk a bit more about UK inflation. Coming up, Germany's natural gas reserves may be filling faster than normal, but the country will still struggle to have enough fuel to get through the coming winter. We'll have the latest on Europe's energy crisis, plus we'll be also speaking to OPEC's new Secretary General. Don't miss that conversation. It's later today at 10:30 a.m. London time, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, we have some pretty incredible news. I find it incredible. I did wake up this morning. I always check Elon Musk's Twitter, and there was something about him, buying Man U. And then, of course, my team said, no, he said it was a joke because he jokes about it often on Twitter. Well, check this out. I think we have a share price for Manchester United gaining some 17% after these Musk jokes about buying Twitter. We're joined by Lynn and Swetha, and I just find it incredible that you can move a share price, right, by 17%, 17%, just by kind of joking and saying, no, I was just joking. Is he at some point going to get, more in trouble with regulators?
I think we've been saying that for years now, it seems like. I mean, clearly, I think, if you look at the broader picture, it speaks to the kind of silliness that's crept back into the market. You're seeing big gains in stocks like Bed Bath & Beyond, and this sort of speculative, bit of froth is starting to come back as you're seeing stocks rally.
Yeah, I mean, it's pretty incredible. So I don't know whether you have like an Elon Musk watch or if it's something, do you have like an algorithm just to track what he says to see if you have any exposure in terms of equities?
I think he is an incredible stock market influencer, but in the long term, there is, the fundamentals do matter, and we can see the Manchester United share price since his denial has started to sort of come back off of its intraday highs. I would think, if anything, what people are more focused on perhaps is whether Twitter gets done or not, more than maybe Manchester United at this point.
All right. I mean, I just find it incredible. It's like it's a little bit of fun, but then you wonder, like, if your share price falls by a lot, you kind of wonder how you look at all of this, right? Let's talk about UK inflation. A little bit less fun. The temperature may have cooled in the UK, but inflation is only getting hotter. Now, we had that inflation print earlier this morning, and the country now faces prices more than 10% higher than last year. We'll have plenty more from Lizzie Burden in just a second. How do I trade inflation right now? So you saw that 210. Lynn, in terms of UK gilts, does it just become ever higher? And I mean, we can't avoid a recession at this point, can we?
Yeah, absolutely. I mean, clearly it seems like everyone is predicting a recession coming for the UK. And I think, from the investors that we speak to, it seems like a very popular bet remains to be short the pound, that it's not going to be able to hold at that 120 level. You've got the BOE sort of hamstrung in what it's able to do. Inflation is getting hotter, and it'll all add up to a weaker pound.
Yeah, Swetha, what's your take on inflation overall in the UK? Again, we know it's coming. The Bank of England said that this is a bit of a nightmare, and that we will see quite a lot of recession. Do you buy anything in UK equities?
I think the UK equities that are not exposed to the domestic economy, and the FTSE 100 is blessed with many companies, the preponderance of whom actually derive the majority of their earnings overseas, will probably do quite well, given that weaker pound and the stronger overseas currencies will be helpful for earnings in the same way that the weaker euro has been for euro area earnings in this latest reporting season. So actually, companies that are not exposed to the domestic UK economy, that have global presence within this, many leading consumer goods companies in the FTSE 100, I think those are good places to sort of hide out from the storm. As far as it goes for domestic companies, I mean, it is definitely the tightrope that the BOE is walking between avoiding a recession on the one hand and avoiding inflation getting entrenched is getting far narrower. So it seems inevitable that, something will have to give.
Yeah, Swetha, overall, how do UK equities compare to European equities? Like, is there a part of the equity world where you have more conviction than others, given all of the uncertainties?
Well, if we look at the European equity markets, it's quite remarkable that this year, despite all the doom and gloom surrounding them since the start of the year, the invasion, the Ukraine war, all of that should have intuitively meant a hit to earnings, but actually quite the opposite. The latest round of reports have actually seen European earnings go up marginally, and the revisions are actually benefiting companies with stable margins more than they are the more aggressively cyclical ones. So I would expect companies that the more the quality growth bucket to actually benefit going forward, given that they have pricing power that's evident from the fact that their margins have been quite stable year to date. And we're seeing already a re-rating in sectors such as sectors.
Yeah, no, finish your thought, Swetha.
I was just saying sectors such as semiconductors, certain parts of the consumer world, which had seen expectations beaten up very badly, have now staged a strong recovery as those earnings have come in better than expected.
All right, Swetha, let's also bring in our Lizzie Burden to have more of an in-depth look at actually the kind of inflation that we're getting here in the UK. 10%, double digit for the first time in 40 years.
Yes, and more than 5 times the Bank of England's target. We're here much sooner than we thought. Economists have got it wrong yet again. It's driven by food price inflation, which means it's going to hit the poorest households the hardest. But it's also broad-based, which is worrying for the Bank of England because it indicates that this is going to be longer lasting. So Bloomberg Economics has has now changed its call. It now sees a 50 basis point hike in September, so catching up with the market's view. And it's really worrying. You're seeing it in this yield curve inversion. The reason that investors are worried is because if the Bank of England goes for a second jumbo hike, it's going to have knock-on effects. You know, the Bank of England already saw this long, shallow recession as a result of the one jumbo rate hike. It's going to deepen the slowdown even more.
Yeah, but of course they don't have a choice given the high inflation. And if you look at expectations of how much the Bank of England will raise rates, I mean, they've repriced quite significantly, I think, in the last hour or so. Lizzie, we also have the leadership contest between Liz Truss and Rishi Sunak. What have they been saying about energy prices? Yeah,
we had more hustings in Scotland yesterday. The two candidates having to respond to these proposals by the Labour leader Keir Starmer. He said that he wants to continue the windfall tax in order to freeze energy bills over the winter. Rishi Sunak saying that he doesn't want to do that, but he would target support at the poorest households. Liz Truss falling back on her tax cuts that she's already proposed. So a window of opportunity for Rishi Sunak to reframe the debate away from tax cuts, focus on energy, because this is at the heart of the cost of living crisis.
Swetha, does it make a difference actually to you, who's Prime Minister in the UK, on whether you like equities or not? Or because it's a Tory government, it won't make that much of a difference?
Yes. I'm sorry, I wasn't realize the question was addressed to me. Well, I think at this point, what's more important is evidence of policy continuity. And on that front, I think the actual leader is probably less relevant than what tools they have to attack the very pressing question of the day, which is inflation and how to tackle it, and the path of the economy going forward.
Yeah, and I guess we can't not talk about pound, right? Yeah. I mean, this means everything. I remember, actually, I think Mark Carney saying, you know, we rely on the kindness of strangers. Yeah. Lynn Thomason, what does this mean for where pound goes and actually what it means for investments?
Yeah, I mean, I think, you know, clearly, you know, everyone we talk to, it's really hard to find anyone that's bullish on the pound right now. I mean, I was surprised to hear, I mean, it was an outlier view, but still someone talking about the possibility of pound, you know, and dollar parity coming in the next few months. And I mean, that's such an extreme view, but still just the fact that that's being part of the conversation, you're hearing that sort of creep up, really sort of emphasizes what a bearish outlook people have for UK markets right now.
Lynn, thank you so much for joining us. Lynn Thomason, Lizzie Burden and Swetha Ramachandran, they're investment manager for Global Equities at GAM, with a nice roundup on a quiet, pretty quiet August day. Coming up, meeting the new boss. We'll be speaking with the Secretary General of OPEC a little bit later today. Our Manus Cranney joins us live from Vienna ahead of that interview. That's coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. A couple of movers. Now, the one that's most interesting is probably Man U gaining some 17% after that joke from Elon Musk that he wanted to buy it and then he didn't want to buy it because it was a joke. So look at, you know, Man U gaining briefly 17%. The other two stocks that we need to watch is Cineworld. Now, this is not because they think it's the end of the world in terms of people not going to the cinema, but they are weighing a rescue deal that would reduce the value of shareholder equity but eases the debt burden. This is after the post-pandemic lockdown box office recovery that took a bit of a step, or it was harder actually to reverse. So it's down 40% because it would dilute shareholder value. And then Uniper, Germany's Uniper, suffering a 12 billion euro hit because of the energy shock, and that share price is down 7%. Now let's get straight to the Bloomberg. First Word News, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Inflation in the UK jumped more than expected last month to the highest level in 40 years. The Consumer Price Index rose 10.1% in July from a year ago, following a 9.4% gain in June. That will now put pressure on the British government and on the Bank of England to take action. Germany will struggle to have enough fuel this winter if Russia cuts off supplies. Even if gas inventories meet the nation's 95% target by November, That would only cover around 2.5 months of heating, industrial and power demand. That is according to the nation's energy regulator. The risks of energy rationing in Germany is still high. In the US, Republican Liz Cheney has suffered a crushing defeat in a bid for re-election by a primary challenger backed by Donald Trump. She's now calling on Americans to unite across party lines to keep Donald Trump from winning the White House yet again. Cheney made a point of conceding to her opponent, conservative lawyer Harriet Hageman, something she long criticized Trump for never doing after the 2020 election. Chinese Premier Li Keqiang has asked local officials from 6 key provinces to help bolster growth measures. According to CCTV, Li held a meeting in Shenzhen with officials, asking them to help boost consumption and offer more fiscal support via government bond issuance. Li has reportedly acknowledged pressure from COVID lockdowns and told officials to strike a balance between virus control and also economic growth. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
More on oil next. Double digits UK inflation rises more than 10% to the highest levels in 40 years, putting more pressure on consumers and on the Bank of England. No time to relax. Germany's energy regulator says the nation may not have enough gas to get through winter, even as reserves fill faster than normal. Uniper posts a €12 billion loss. And meet the new boss. We're in Vienna to speak with OPEC's new Secretary General in his first interview since assuming the role. Haitham Al-Ghais talks oil markets and the biggest challenges facing the producer group. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, oil steady this morning after tumbling to the lowest in more than 6 months. Investors weighing the prospect of Iran coming back online against weakening global demand. Now, there are just some of the headwinds facing the new Secretary General of OPEC. Bloomberg's Manus Krani will be speaking to him a little bit later on, and he joins us now from Vienna. Manus, good morning. So fun to have you on the program. So tell me a little bit more about what's been driving the oil price action lately.
Oh, to be in your airspace, it's a rare thing, but it's good to be with you. There's a palpable sense of fear in the oil market. Whether it's about China, you're talking about Uniper, you're talking about nationalising utilities in France. So there is this palpable sense that we've moved, Francine, from demand destruction, if you recall back at the 120s, 130s, that moment of real panic. So we've moved from demand destruction, I think, to a much different scenario, which is gaming out whether the world economy is going into that hurricane, as Jamie Dimon calls it, or whether the Chinese data is nearing a bottom, Francine, and when it comes back, it'll come back virulently, and it will drive the products, the jet fuel, the consumer fuel, much higher, more aggressively. So for me, it's about that with an added soupçon, note the French, of Iranian crude maybe coming back to the market. How quickly and how aggressively? Good morning.
Yeah, good morning, Manus. I do find it crazy, actually, how fast everything's changing. So 2 weeks ago, we were also talking to the IEA, and they were saying, look, OPEC Plus probably should have done more. We need more barrels of oil on the market to ease everything. And then suddenly you think, right, well, they're putting the extra barrels, not huge amounts, but because of China, we worry about the world economy. So what's the new challenge, or what's the biggest challenge for the new Secretary General?
I think it's balancing that, as they said in the press release themselves, that spare capacity is something that we will talk to him about when we sit down with him. And also in terms of the ability to navigate these waters. Russia is still part of OPEC Plus. The Americans, as you know, have put great pressure, traveling to Saudi, traveling right the way across the Gulf. The only thing the Americans, and nay, not just the Americans, there's not just Amish Hochstein and Joe Biden who care about the price of a gallon of gas at the pump. It's a global issue. And that's down for 50 days in a row. And that's what matters in terms of the cost of living crisis. I think, Francine, it's that. I think it's the outlook for demand. And in terms of, bring your mind back a year ago, the Saudis and the Emiratis were fighting on Bloomberg airwaves over being given new baselines. So I think that there are many issues for the new Secretary General, Haitham Al-Ghais.
Yeah, I'm really looking forward to actually that wonderful conversation you're going to have with the new OPEC Secretary General. So what's his background? What does the oil market, make of him?
There's a wonderful phrase that I picked up from somebody who was with me in Dubai last week, a veteran of the oil markets, a very considered individual, a man of specificity. He understands more truth than he dares speak. I like that. I think it's very rich. I think it gives you sort of a feeling about what kind of not just a technocrat this gentleman is. He's very knowledgeable. He comes from the background. He's steeped in the oil markets. He's traded oil for 10 years at KPC. He then went on to live in China, where he marketed Kuwaiti oil to the Chinese. So he has a deep-seated knowledge both of the infrastructure of that market, and maybe his insight in terms of the Chinese demand will be quite prescient when we sit down. The other factor is, of course, he's not just an oil man from trading and marketing, but a real globalist in terms of his approach. He's advised many Kuwaiti oil ministers, and he was appointed by this. I'll leave you with this thought: acclamation. Nobody else ran. Nobody else was contested. That's a very powerful thing. That, I believe, is even more powerful than a unanimous vote. We know on daybreak sometimes there is not enough unanimity or acclamation for me.
I know, but we always follow Manus, and that's the #1 rule. Just follow what Manus needs and wants. Manus, talk to me a bit. I mean, as a Secretary General, what's your role? Do you kind of, do you bring everyone on side? Do you have to? Are you like a chief psychologist because you have to make sure that every country feels like their voice is heard? But then it's really up to 1 or 2 producers to decide what to do because they're the only ones with that spare capacity.
My sense is that this is a Kuwaiti Secretary General coming from within the GCC grouping, and there's this fear that he leaned towards the Saudis or the Emiratis, in other words, the Big Five and the Russian narrative. Or will he reach out, as he has already done in a whole series of interviews, Francine, around the languages? He's done interviews in Portuguese, he's done interviews in French, he's done interviews in Arabic. He's reaching out, and in Africa as well. So the Secretary General, the new Secretary General, has already very much set out his stall of being a coalescer, a shepherd, if you will, of these nations that are part of the OPEC group. My sense is he's broad-reaching, he's a globalist, and has a very outward-looking view. Certainly we're going to have a little bit of a chat about what's your approach with America. So we'll put that to Secretary General when we sit down with him. So I think it is about making sure unity remains and a galvanizing of the spirit in terms of the 5 big nations that got the uplift to their baselines.
Unity. I mean, the parallels with central bankers are not lost on me. Manus, great work as always. Manus Cranney there in Vienna. We'll have that interview with the new Secretary General. The first time we'll be hearing from him in an extended interview in the next hour. Now, we're joined by Craig Erlam. He's Senior Market Analyst at Wanda. Craig, thank you for joining us. Bit of a nightmare predicting a global recession, what that means for spare capacity. Where do you see the price of oil going?
I think for the first time in quite a while, actually, there's plenty of argument for more downside, especially if talks between the US and Iran progress positively, although there's plenty of scepticism around whether that's actually going to come to the fore. In terms of global demand, I do think maybe the markets are still underpricing a recession next year in more parts of the world. I think the US is more resilient than most. The UK has accepted, and I think accepted a long time ago, that a recession was coming. It was a case of severity. And I think Europe is going to follow suit pretty quickly as well.
But Craig, are you now worried that there's actually that OPEC Plus with those extra barrels of oil, not huge, but still extra barrels, will give too much to the markets?
I'm not concerned about that. I think that increase was marginal. I think it was a token gesture towards President Biden, to be quite honest. I don't think there was anything really behind it. And I think the group will not be hesitant to scale back if they do believe that the market is going to rebalance in a way that's not favourable to the price and not favourable to suppliers. So I don't think there's any real risk that we're going to see an oversupply situation, certainly not to the scale that we saw a year or two ago.
Yeah, do you think we've reached peak oil demand, especially in China, because of the upending, if not recession, certainly downturn in the global economy?
I don't think we've reached peak oil demand in the longer term, of course, but I think in the short term we could be nearing that point. I still think there's maybe a little bit of a way to go. The problem with China is the lockdown measures that it imposes and the fact that it's so committed still to its zero COVID policy means that it creates enormous uncertainty on what Chinese demand will be a month from now and 3 months from now. I still think going into the end of the year, these economies are still performing in a manner that's exceeding expectations more broadly, but there's certainly cracks appearing all over the place, some cracks bigger than others, and I think that will ultimately start to weigh on demand much more considerably going into next year. and then it's a case of which economies are going to show themselves to be strongest. I think the UK, of course, has many vulnerabilities. Europe, I think, is probably, like say, I think it's going to prove to be weaker than many expect, certainly the central bank, and the US will very much stand at the forefront of resilience.
Craig, what's your take on Iranian oil? Will it come back on the market soon?
I think there's a lot of sceptical voices around whether this deal will get over the line, and I think I'm probably among them. I think many hope that we will see Iranian oil back on the market soon, but these final points, it feels like, have been discussed now for many months. I think it was February when we were told that a deal could be days away, and now we're 6 months on and we seem no closer to an agreement actually being reached. What we ultimately seem closer to is a point when both sides are going to say yes or no. And I think that'll remove a bit of uncertainty for these markets, but I do think the markets are partially pricing in. So that could be one upside risk, is if both sides walk away from the negotiating table, that's one upside risk, I think, in the near term for these oil prices.
Craig, I don't know whether you're expecting, and I know it's impossible to predict, but also blackouts in certain parts of Europe. We had a story here in the UK, and whether that means that we'll try and access a lot more LNG. It's the fastest, but also the hardest to get your hands on.
Yeah, I mean, I think blackouts is still not in remotely the base case scenario. I still think that is an extreme scenario. But ultimately, as we've seen so often now over the past 6 months, Europe in particular is still so heavily exposed to Russia and the whims of the Kremlin and what's going to flow through Nord Stream 1. Obviously, the measures that have been taken to secure more LNG from other areas of the world, most notably the US, has provided a big boost. We've seen, obviously, the floating terminals that Germany has now secured in order to try and remove its reliance on Russia, alleviate some of that vulnerability. Yeah. But I think the next 6 months is ultimately going to be key. This is the critical point for Europe. If they can see out the next 6 months, then I think beyond that, then we'll see that they'll increasingly become less sensitive and that prices can start to alleviate somewhat. I think blackouts at this point is still a very unlikely scenario, but never say never, because there's a lot of things we said 6 months ago seemed extremely unlikely that have now just simply become the norm.
Yeah, you're right. Never say never. Craig, are you expecting a lot more volatility in the price of oil and in the price of gas and everything in between just because of all this uncertainty between a recession and the war in Ukraine and just government policies?
I mean, I think the volatility has possibly only just begun. I think this next 6 months, last winter we were talking about the threat to European gas and whether the inability to restock supplies was going to cause problems for the price, and whether we needed a warmer winter in order to try and see out with the winter period without prices spiking too high. I mean, that's gone up multiple times over the course of the last 8 months, and now we're going into this winter when it's quite a severe case. And yes, stores are still relatively high. I think they're above 70% in Europe for natural gas, so we're not talking about a dire situation yet. But again, it's just so heavily dependent, as I say, on the whims of the Kremlin. So I think volatility is not just here to stay. I think we're possibly only just getting going. And I think once we move into that winter period, especially if the weather is cold, and we've obviously seen the impact now of droughts and what that's having on the Rhine, etc. I think the volatility is not only just beginning, and it's certainly here to stay for the next 6 months at least.
Craig, I think you've just instilled fear in all the trading rooms in the UK. Thank you so much for joining us. Craig Erlander, Senior Market Analyst at Rwanda, joining us, of course, on the all-important oil market. Coming up, a €12 billion loss for Uniper in the first half. Germany races to fill its gas stockpiles ahead of the coming winter. All of that is next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Pilots at Eurowings, a discount unit of Lufthansa, are voting on possible strike action. That is after failing to reach a deal with the airline on jobs. The faster than expected recovery in travel has clashed with a shortage of staff at airlines and also airports. It has brought about a summer of chaos, with Lufthansa and other airlines cancelling thousands of flights. Now, Walmart shares have surged the most in almost 2 years after surpassing Wall Street's profit expectations and raising its full-year forecast. The results signal that the retail giant is finding its footing after slashing its outlook just 3 weeks ago. CEO Doug McMillon says Walmart will be well positioned for the coming holiday season after making good progress on inventory growth and supply chain costs. Amazon is accusing the Federal Trade Commission of harassing its founder Jeff Bezos and the company's CEO Andy Jassy. That is, as the regulator probes the e-commerce giant's business practices. According to a filing, the company said that the FTC has made unduly burdensome demands and that some are just unworkable. The FTC has declined to comment. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Leanne Gerns there with the latest world news. Now, Uniper posted a net loss of more than 12 billion euros in the first half as German utility struggles to replace gas supplies ahead of winter. Meanwhile, Germany is also racing to fill its natural gas stockpiles, but the country will still struggle to have enough fuel to get through the coming winter. Now, for more on all of this, let's bring in our Bloomberg energy reporter. She is Vanessa Desam. Vanessa, great to have you on the program. So what impact do you think Uniper results will have on Germany's broader energy market?
Yeah, traders and everybody in the market are definitely paying attention to Uniper and its ability to survive to the crisis. The company has taken a huge hit from the energy crunch because it is super heavily dependent on Russian supplies. And we need to be honest, a net loss of more than 12 billion euros is really something. So all eyes are now on how Uniper will implement the stabilization package agreed with the government last month, how this package will help Uniper. And the company still has to buy a huge amount of gas in the spot market. It's one of the largest gas buyers in Europe. So it is still, there is still a way to go, right?
So, Vanessa, how are actually Germany's efforts going to fill gas supplies ahead of the winter?
Germany is struggling. That's all we can say, to fill up its reserves. And it is doing it in a super high cost. So that's what the president of the Federal Network Agency told us yesterday, that high costs are a burden. And stockpiles are currently at 77% full, which is 2 weeks ahead of schedule. What has helped Germany is that it's importing a lot of LNG. It's coming from the US and also importing from Norway. But really, there are a number of variables that can hinder Germany's prospects, right? The weather and when the heating season is going to start, if you're going to have like cold autumn, that all is a huge risk for Germany now.
Yeah, and then there's this race, of course, of other countries, I guess, trying to pay more. Thank you so much for all of your reporting. Vanessa Desam there, our natural gas reporter. Now, even with Bitcoin down nearly 50% since the start of the year, the Kraken chief executive, Jesse Powell, says he's staying bullish on the crypto. After all, it is his industry. Now, he spoke exclusively to Bloomberg about his outlook for the market.
In terms of the liquidity in the market, I think that the retail investors have maybe pulled back a bit from where they were 6 months ago. I think a lot of great reasons why. I think the macro environment is really tough right now. Inflation seems to be out of control. We're by all measurements in a recession here in the United States. So that's to be expected. Obviously, when people have more discretionary income, they're making more investments. I think right now they've been worried about the price of gas and the price of the living expenses.
So, Jesse, at the end of 2021, it was trading more around $46,000. Today, it's trading south of $24,000, which maybe could buy you a Honda Civic. What's your outlook now?
I wasn't expecting all of this craziness in the macro environment. However, I'm still hopeful that I'll be able to buy a Bugatti by the end of this year for 1 Bitcoin, but I wouldn't hold my hopes out. Would you even want to pay for the gas for such a car at this point? So, I'm still very bullish. I bought in Bitcoin again at 18,000. So I'm happy to ride it all the way back up. I'm still very bullish in the long run. The fundamentals keep improving. So I would never bet against Bitcoin.
I love that. This is like a new metric. It's every share price should also have an equivalent to a car, just like Bitcoin. The Kraken chief executive there, Jesse Powell, speaking exclusively with our Kailey Leinz. Now, coming up, President Biden has signed a sweeping tax, climate, and healthcare measure into law. We'll have plenty more on what that means for his popularity. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, President Biden has signed a sweeping tax, climate, and healthcare measure into law. It's a major legislative victory for Democrats ahead of the November midterms.
The bill I'm about to sign is not just about today, it's about tomorrow. It's about delivering progress and prosperity to American families. It's about showing the American and the American people that democracy still works in America.
Meanwhile, Republican Congresswoman Liz Cheney has also called on Americans to prevent Donald Trump from winning the White House again. Well, Cheney suffered a crushing defeat to a primary challenger backed by the former president. She had become an outcast in her own party for her strong anti-Trump stance. Well, Bloomberg's Bruce Einhorn, covering U.S. politics for us, now joins us. Bruce, a lot to go through. First of all, approval rating for Joe Biden. It's not good. It's actually very, very low. One of the lowest on record for any sitting president. But he's, on a roll when it comes to legislation. How do the two match up?
Well, Francine, I think the Democrats are hoping that eventually that the voters will start picking up on the fact that they've had a very productive summer. So there's the Inflation Reduction Act that they just passed, which of course has a huge amount for climate, but also has spending for health care, also has tax changes. But that's just the latest. Before that, there were bills such as the one just recently signed by the president to support the semiconductor industry in the U.S. There was the bill to provide health care benefits to veterans. There was gun control, mental health care bill. So the Democrats are hoping that they can now start showing this to voters after quite a long time where people had pretty much given up on the idea that there was really going to be very much coming out of this Congress at all at this point.
Bruce, talk to me a little bit about the Republican side, and actually Liz Cheney. Can you be anti-Trump and get elected as a Republican?
It's very difficult at this point. So there were 10 Republicans in the House who voted to impeach former President Trump in January of 2021 after the attack on the Capitol. Of those 10, now 4 have lost primary challenges, including Liz Cheney. 4 decided, I'm just going to retire, and only 2 will continue serving in Congress. So that's a sign just how dangerous it is for a Republican to try to go against the line that the election was stolen. It's just very difficult to do that. It does show that that the former president still has quite a strong grip on the base of the Republican Party. The real question is whether that's something that extends beyond the base of the Republican Party to the broader electorate, which is something that will be tested in the months ahead.
Brilliant. So, Bruce, thanks so much. Bruce Einhorn there with pretty insightful knowledge of U.S. politics. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York. Our Danny Berger will be here in London, and this is Bloomberg.
I don't think we're in the 07, 08 type of environment.
Net, I think things are not as bad as they seem, and we just need to see more data before we get more bullish or bearish on the outlook.
I think the market probably does not move materially higher from here.
The market's been enjoying the sunshine over the last few weeks, and I don't think that's going to last.
I think most importantly, you should be watching global data surprises, and how the global economy evolves.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Double-digit shock in the UK. Inflation rises more than expected to the highest level in 40 years. Liz Cheney pays the price for defying Donald Trump. The Republican Congresswoman loses big in a primary election and urges Americans to keep the former president from regaining the White House. Meet the new boss. We talked to OPEC's incoming Secretary General about supply demand and the energy crisis hanging over Europe. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Anna Edwards, alongside Matt Miller and Kailey Leinz in New York. And Kailey, it certainly feels like we are in those summer doldrums. Volume is light, but of course that means opportunity for volatility is high.
Oh, as ever, Danny, and that may also be increased by the results we're getting out of retailers later this morning, as well as U.S. retail sales data at 8:30 a.m. Eastern. So markets are definitely gearing up for those prints. But as for how the picture looked in Asia overnight, it really was quite risk on. You have the MSCI Asia Pacific Index as a whole now at a 2-month high, and really the outperformance has been led by Japan. The Nikkei 225 up more than 1% overnight. It is now near its highest level of the year, at the highest going back to January 5th. And you had Chinese equities higher as well. The CSI 300 up the better part of 1%. The Premier Li Keqiang was talking to 6 provinces that make up about 40% of Chinese GDP, asking officials to shore up growth and have more supportive measures, including fiscal policy with more bond sales. They're really trying to support the economy in light of the weaker data we got earlier this week. What's interesting is while that fed through to Chinese equities, it did not feed through to iron ore, which was down for a 4th day in a row, of course, on concern about demand, specifically from China's property sector. Down 4% or so overnight. We are now just north of $101 per ton. Finally, in FX, I would note the Japanese yen, your big underperformer on the day, weaker against the dollar by about 0.4%. We're trading just south of 135, Matt.
All right, I'm watching S&P futures this morning that are down after a slightly positive close yesterday. In the cash trade, we were up to 43.05 on the S&P. We're looking at a drop of about 0.4% on futures today. On the other hand, investors are willing to let go of 10-year debt. That lets the yield float up almost 6.5 basis points to 286.76. So maybe that's a positive for the trade today. You can see that NYMEX crude is moving up 41 cents a barrel, but only to 86.94. And that's got to be a tailwind as well for stocks, because crude yesterday was trading above $90 at some point in the trading session. So now we're a lot further down from that level and coming back up. Bitcoin is off, but only 0.2%, 23,824. So it is under that 24,000 level, but still holding right around there. Danny, what do you see in terms of the European trade?
Well, it's been a tough session, especially when it comes to data. We just had second quarter GDP readings coming in. This is the preliminary figure. It has been revised down from the initial advanced reading. That advanced reading, 0.7% quarter over quarter, now 0.6%. So it is a disappointment when it comes to the growth picture here in Europe. Already we've seen European equity markets turn around. They started the morning, they started the open off positively. Now they're sinking lower. A lot of it does have to do with the fact that not only do we get just now those GDP figures, but it's all about UK inflation coming in very hot, hotter than expected, over 10%. So that's had the effect of pushing up UK 2-year yields 26 basis points. But I should say it's not just the UK, it's the entirety of the European bond market that's now getting punished because of it. Now, that's likely has to do with thin liquidity, but again, it's just the concern over stagflation as we see global growth slow, and at the same time, those high inflation readings. That's part of the reason why we saw stocks turned around. Your euro dollar not doing much today. The dreaded UNCH trading at 101.72. Nat gas at a new record. This is Dutch front month futures. This is the equivalent of $400 a barrel, 236 euros per megawatt hour. That's another advance of 4.5% this morning as the energy crisis continues. Speaking of energy crisis, Uniper reporting earnings today. Kailey, it was brutal. A 12 billion euro loss. Of course, Germany has already had to bail out Uniper. They say it might be losses until at least 2024.
Yeah, brutal is almost a delicate way of putting it, Danny. So we definitely definitely will be keeping an eye on those shares throughout the day. And there's plenty more to keep an eye on ahead today as well, including retail earnings continuing. Target, TJX, and Lowe's all will be reporting before the bell. Plus, we'll get some economic data related to retail. U.S. retail sales will cross at 8:30 a.m. Eastern time. How much are they influenced by the fact that prices at the gas pump are lower? And ultimately, what will they mean for the Federal Reserve? Maybe we'll get some hints into the Fed's thinking when minutes from the July meeting cross at 2 p.m. New York time, Danny.
Well, as we were talking about, the temperature may have cooled in the UK, but inflation, it's only getting hotter. The expectation was for more than 9%, but instead, coming in, inflation is 10%, 10.1% to be exact, higher from last year. This was a really tough reading. It pushed all bond markets in Europe down. Let's get more with Bloomberg's Lizzie Burden. So, Lizzie, what sort of position does this put the BOE in?
A difficult one, Danny. The Bloomberg Economics has changed its call from 25 basis points to 50 basis points for September because of this reading. So it's driven by food price inflation, which means it's going to hit the poorest households the hardest, but it's also broad-based, which means that inflation is likely to last for longer. And of course, we're not even at the peak yet. Energy bills are set to rise in the autumn. The Bank of England had seen inflation rising above 13% then, but it could be even higher because we're already past 10%. So it's a difficult moment for the UK. The recession risks even more, possibly because we're likely to get another jumbo rate hike.
All right, Lizzie, thanks very much. We're going to continue watching the effects of double-digit UK inflation on the economy and on markets as well. Meanwhile, back here in the U.S., in Wyoming, to be specific, Republican Congresswoman Liz Cheney has called on Americans to prevent Donald Trump from winning the White House again. Cheney suffered a crushing defeat to a primary challenger backed by the former president. She had become an outcast in her own party for her strong anti-Trump stance. Anne-Marie Horton, Bloomberg Washington correspondent, joins us now from D.C. for more. So I thought it was interesting that Liz Cheney did actually give a concession speech, unlike former President Donald Trump.
Well, I think that was the point, right, Matt? She was trying to make. She said, I'm here giving a concession speech. This election, this primary is over. This is, Matt, as you outlined, she's had a very tough go within the Republican Party. It was all but concrete and for sure that she was going to lose this primary, given her criticism of the former president, given the fact that she voted to impeach him and her rising star started to dwindle within the Republican Party, the former president really throwing his weight behind her challenger. But we should note she let the door open in that concession speech to potentially a future path in politics. She talked about Abraham Lincoln, and this was the quote, Lincoln was defeated in an election for the Senate and the House before he won the most important election of all the chatters that potentially Liz Cheney could make a 2024 bid for higher office for the President of the United States.
All right, well, Anne-Marie, we'll look forward to your updates on Liz Cheney's next moves. Meanwhile, let's talk about next moves on the foreign policy front, specifically as it relates to the Iran nuclear deal. We understand the U.S. has now received the proposal from the EU in those negotiations, weighing Iran's response to them. What do we expect the response from the Biden administration will be?
Well, we don't know just yet. They're playing their cards very, very closely. But what we do know publicly, the Biden administration has been saying is that all that could be negotiated has already been negotiated. And we know that there's a few items, most notably the fact that the Iranians do not want to make sure that this, if they were re-enter the JCPOA, that this new agreement is set in stone. And that is something that the Biden administration is unwilling and actually cannot legally binding say that to the Iranians, because they know that if the Republicans were to take over, say, Congress or the White House in the future, there is potential that they could scuttle the deal. So there's still some major roadblocks that have been big ticket items for the Iranians to get into this deal that the United States is just completely a non-starter. And then you look at what people in the oil market are saying. Goldman Sachs is talking about the fact that even if there was a deal, they do not see one in the short term at all. But they say that this negotiation process is mutually beneficial for both parties.
All right, Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horder in there talking to us about Liz Cheney and Iran. Now, speaking of the latter, oil is up slightly this morning after tumbling to the lowest in more than 6 months as investors weigh the prospect of Iran coming back online against weakening global demand. These are just some of the headwinds facing the new Secretary General of OPEC. Bloomberg's Manus Craney will bring us an interview with him later in this hour. He joins us now from Vienna to talk about this really important interview. Manus?
Matt, very good day to you. And it has been 2.5 years since we've been here at the OPEC headquarters. We're in the bowels, we're in the press room. The last time the Saudis and the Russians scuttled and rushed out of here was March 2020. The world has changed. Demand is irrevocably shaken up. There's a new man at the helm, Secretary General Haytham El-Gaith. He comes from the GCC. He's a Kuwaiti. And he's facing, I would say, a palpable sense of fear on the demand side from China and indeed a global recession angst. So that is on the demand side and on the supply side. And this is critically important. And we will talk to him about this a little bit later on. The supply side, that severe issue around spare capacity. And if more sanctions come into action as they're scheduled to do at the end of the year, the screws will turn at the end of this year in the oil market. So the issue will be spare capacity, and in terms of whether he agrees or disagrees with me on the sort of the demand. We've moved past demand destruction, and now we're on a very, very different narrative about global demand because China is far from exiting zero COVID. Matt.
Manus, really looking forward to that conversation. Bloomberg's Manus Craney there in Vienna. Of course, don't miss that interview with the new Secretary General of OPEC. That will be later in this hour. Now, turning to Norway, where their $1.3 trillion sovereign wealth fund posted a loss in the first half. You have rate hikes, surging inflation, and Russia's invasion of Ukraine, all of that spurring volatility. Stephen Treloar, our Oslo bureau chief, joins us now. So, Stephen, the world's biggest sovereign wealth fund, the biggest holder of public equities, do they need to change track now that they've suffered a loss that's almost akin to the start of the pandemic?
Thanks, Danny. There's very little they can do, actually. They're largely an index fund. Their mandate is set by the Ministry of Finance and the Norwegian Parliament, so they have very little room to move there. But they do have some room as far as allocation goes on the margins, and with the outperformance they had in the second half, it seems they're trying to do everything they can to make the most of that.
All right, Bloomberg, Stephen Treloar, thank you so much, reporting from Oslo. And of course, we'll hear from the CEO of Norway's Sovereign Wealth Fund in the next hour. That's coming up at 6:30 a.m. Eastern Time. Meanwhile, to another story we're following. It was just a joke, guys. Elon Musk says he was joking about buying Manchester United, and he isn't in the market for any sports teams. The billionaire walked back from the claim after earlier tweeting that he was purchasing the English football club in a thread joking about his political allegiances. The latest tweets could potentially attract regulatory attention because, of course, Manchester United is listed on the New York Stock Exchange. So on that note, let's take a look at how the shares are performing in the pre-market session. Initially, when it opened right at 4 a.m. Eastern Time, the stock surged 17%. It has since pulled back from that a bit, but still they are higher on the day by about 3.3%, at least in early hours. And as for one of Elon Musk's other properties, his actual properties, that would be Tesla, which of course is publicly listed, it's a little bit lower, down for a second day after rallying 50% off the bottom in May. Right now, that stock is down, call it 0.6%. One final stock to check on, Bed Bath & Beyond, because meme traders are back in a massive way, and this is really the poster child for it. This is a stock up almost 350% in the last 3 weeks for pretty much no reason at all. And those gains are continuing today, up 27% before the bell. Analysts are out, Danny, saying this valuation is unrealistic. You should sell the shares here. And yet the meme traders seem to just be saying to the moon.
Gosh, with Bed Bath & Beyond and Man United, a great reminder as always that markets are not always so efficient. But what if they were? How should we be positioning? What to expect in this economy? We'll bring that all up with Sandra Horsfield, economist at Investec, who joins us later in the program. And it's official. President Biden has signed a sweeping tax, climate, and healthcare bill into law today. Today's Big Take looks at the influencers. That includes Bill Gates, who've been quietly lobbying Joe Manchin in the hope of securing a rare climate win. The billionaire spoke in the new Bloomberg Green podcast Zero, launching September 15th.
We were able to talk even at a time when he felt people weren't listening, and I wouldn't have wanted to be in his position. The last 6 months have been challenging.
This is Bloomberg Surveillance, early edition. I'm Matt Miller with Kailey Leinz here in New York. Danny Berger with us out of London. I'm looking at the S&P, and the rally that we've seen from the bottom has pushed the index up through the 50-day moving average, and now we're at the 200-day moving average. To be exact, the S&P closed yesterday at 43.05, and the 200-day moving average is about 43.26. So we're about 21 points away. Right now, futures are down, but they could turn around as they have in these volatile markets the last few sessions. Lynn Thomas, and Bloomberg Markets editor, joins us now to explain why there's so much optimism in the face of sometimes pretty negative economic data, Lynn.
Yeah, absolutely. I mean, I think in some sense it feels like FOMO is back in this market. You're seeing, crazy stocks like Bed Bath & Beyond go up, Manchester United rallying on Elon Musk's tweet. People are excited about stocks, and I think there's a sense that everyone wants to pile in before they miss this rally.
And it also seems like we're back in this dynamic where bond yields yet again trending higher based off the UK inflation number. I mean, I'm looking at yields across sovereign Europe moving higher in conjunction with this release. Does that make sense? Is this going to lead to a more hawkish central bank that's also dealing with an economic downturn?
Yeah, I mean, I think everyone you talk to says that the BOE is between a rock and a hard place, that they are stuck between this tightrope of recession and inflation, and there's really no easy answer. Something's got to give, and the inflation data just puts an exclamation point on that.
Well, and of course, it's not just the BOE that's grappling with it. The ECB is as well. And in Europe, Danny was talking earlier about how we have gas prices at a fresh record. Yet we've seen European markets doing fairly well and rallying lately. What is the consensus around the trajectory from here, given all of the headwinds?
Yeah, it's absolutely amazing. I mean, you see gas prices hitting new record highs, and the DAX is still going up. I mean, I think in some sense, markets are tending to move together. So the U.S. CPI report last week really changed sentiment around, and people are buying into it. European earnings were a bit better than expected, I think partly because of the weaker euro. But, it's a big question mark as we get into that winter. And, the real pain starts to sink in on how these energy prices affect the economy.
Yeah, because, I mean, it is just in terms of inflation in Europe. It's all imported, right? It's all about that. So when we look at the energy story, you also look at Germany, for example, you see demand rationing start to creep in. When we're talking about corporates, pricing power, the consumer, I mean, does this change the picture for consumers and their ability to spend?
Yeah, I mean, I think it has to, right? I mean, there was a story today that, Germany may have 3 months of energy supply if Russia cuts off the gas. I mean, I think the big question is, are we going to get into a winter of energy rationing, people having to, figure out how to, whether it's eat or heat, and how to pay for those bills. And I think, that could really deepen the recession that's coming.
Yeah, it certainly feels dire heading into the winter.
It's really bad.
Lynn, despite the pessimism, it's realistic, though. Thank you so much for joining us. That's Bloomberg's Lynn Thomas. And, of course, for more expert analysis from Lynn and the team, check out MLive Go on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Danny Berger in London. Now, keeping you up to date with news from around the world, here's the first word. China is warning the U.S. not to sail warships through the Taiwan Strait. The Chinese ambassador to the U.S. said Beijing views such transits as an escalation by the United States. The Biden administration has said it would send warships and fighter jets through the strait after China responded to House Speaker Nancy Pelosi's trip to Taiwan with a series of military exercises. Ukraine's President Volodymyr Zelensky warned civilians to stay away from military facilities occupied by Russian forces. That followed explosions at a Russian ammo dump in Crimea. A Zelensky advisor says the blasts mark the beginning of a series of attacks. Last week, explosions at a Russian airbase in Crimea destroyed fighter jets. Germany will struggle to have enough natural gas to get through the winter. That's according to the country's energy regulator, which says Germany will have enough gas for less than 3 months if Russia cuts off supplies completely. The country is racing to fill its winter stockpiles after Russia drastically reduced flows on the key Nord Stream pipeline. And in the UK, Rishi Sunak has ruled out freezing the country's energy price cap if he becomes prime minister. His rival, Liz Truss, warned against throwing money at a short-term fix for soaring energy bills. The Conservative leadership contenders were responding to Labour's proposal to freeze the energy cap instead of letting it rise in October. And Danny, of course, the cost of living crisis once again headlined today with that 10.1% print on UK inflation.
Yeah, man, it just puts the BOE in such a difficult position because, yes, they need to clamp down hard on inflation, but at the same time, growth is struggling. So if you push down too hard, again, like the problem we're having in the U.S., Kailey, will you enter recession? Will it be stagflation?
Yeah, and Danny, if growth is struggling, what does that mean for oil demand? We're going to hear from the new Secretary General of OPEC on that subject next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Double-digit shock in the UK. Inflation rises more than expected to the highest level in 40 years. Liz Cheney pays the price for defying Donald Trump. The Republican Congresswoman loses big in a primary election and urges Americans to keep the former president from regaining the White House. Meet the new boss. We talked to OPEC's incoming Secretary General about supply, demand, and the crisis of energy that's hanging over Europe. I'm Danny Berger in London with Matt Miller and Kailey Leinz in New York. Anna Edwards is off today. And Matt, after that UK inflation print, European equities are really struggling to hold on to gains. Seems like things are faring slightly better in the U.S. future session.
Yeah, a little bit better. I mean, we're off, but only by about 1/3 of 1% right now. And we were up to 43.05 in the cash trade yesterday. Plus, we've been seeing a lot of turnarounds in these sessions, so that could happen here, especially considering the fact that investors are selling the 10-year, the perceived safety of government bonds, getting out of that, and the yield rising 5 basis points to 285.49. Also, even though crude is rising, it's only up a nickel, and it's coming up from the lowest point that it's seen in 6 months. So 86.60 after yesterday eclipsing $90 is a pretty low price for Texas Intermediate relative to where it's been. Finally, Bitcoin, not doing much. It's off about 1/3 of 1%. It does tend to track risk assets, so that makes sense. But right now trading at $23,909. Kailey, what do you see in terms of the pre-market movers?
Well, maybe you aren't seeing too much speculative action in the crypto world, Matt, but you are definitely seeing it when it comes to some of those meme stocks. Bed Bath & Beyond in particular has been the standout in recent weeks. It's rallied 350% in just the last 3 weeks, and it is adding to those gains this morning, up another 28% before the bell. It's absolutely wild. And of course, GameStop was the original meme stock. It's not gaining quite as much, though it is higher by about 2.4%. Now, another pretty insane story we are watching this morning is Elon Musk joking about buying Manchester United, the British soccer team, or football team, I guess I should say. He said he was just joking when he tweeted out that he was buying it, and yet we know that this man, the richest man in the world, does have the power to move markets in a massive way with whatever he says, and the shares were up 17% at first when the pre-market opened. They've pared some of that back, but still, the stock is up nearly 5% before the bell, even though, yes, he said it was a joke. Finally, before the bell, we'll also be getting some more fundamental stories, including from Target, which will be reporting earnings. We saw Walmart yesterday beating what was a much lowered bar, the company lowering the bar itself, and yet the stock did well. So we'll see if the same holds true for Target. Right now, it's up 1.7% before those results, Danny.
Kailey, I'm pretty sure the folks in this office, the floor crew around me, would kick me out of the office if I called Man U a soccer team. Anyway, we are looking at European stocks, which are up from the worst of their losses today, now just down 1/10 of 1%. It really does seem to be the bond picture that's moving the equity market this morning. About 3 hours ago, we had UK inflation coming in double digits, surprising to the upside at 10.1%. At one point, UK 2-year yields were up nearly 30 basis points. We've backed off that, now now up 20 basis points, but we are seeing bonds across Europe falling today, getting punished over those high inflation readings. Of course, it is summer. Volumes are low. Liquidity is vanishing ever so quickly. So that's been pushing around this market. So maybe don't read too much into it. Euro, that's pretty much flat at 101.75. And finally, the last thing I have on my board, it is Dutch front month energy futures. They are at a record of 234 euros per megawatt hour. Just to put that in context, Kailey, that's around $400 a barrel of oil equivalent.
Yeah, pricey, pricey, pricey. Speaking of barrels of oil, Danny, let's turn to OPEC because its newly appointed Secretary General says he sees a likelihood of an oil supply squeeze this year, and unity in the oil producer coalition is his top priority. Haytham El-Ghais spoke to Bloomberg's Manus Craney for his first interview since taking office at the start of this month and addressed why the group added just 100,000 barrels a day of capacity at its last meeting, despite the global energy crisis.
It's all relative to the fundamentals we look at. And when we look at everything, the raw data that we have, we examine everything at a technical level, and then it gets raised to the ministers. Mm-hmm. And once they get into that room, all they look at is really these supply and demand fundamentals. Economic indicators, supply data coming out from OPEC and non-OPEC, OPEC plus conformity figures. All of that plays into the element. But there was one element that I think is really important, which we hit on in our press release this time, and you may have noticed for the first time, the issue of spare capacity.
Yes.
And I think we are running on thin ice, if I may use that term, because spare capacity is becoming scarce, and this is an issue. It's like an insurance policy. Mm-hmm. We don't want the oil markets to run on without insurance policy. So that's the reason it was decided that do you go and take a risk and exhaust all that spare capacity that's available, which by all counts people are calling thin and scarce.
Well, how thin is the spare capacity? I mean, that's the number to the market. That's what matters. Your estimate?
Well, it depends. It depends on how you calculate it and what's the characteristics of defining spare capacity. So people have numbers between 2 and 3%, which is around 2 to 3 million barrels a day. Okay. But it depends if you include all member countries or not, if you include Iran and Venezuela or not. So, there are different assessments for it. But it is lower than historical standards, I would say. And that was, if I may, part of the reason why we decided that in view of the uncertainties, mm-hmm. Is it worthwhile exhausting that thin capacity? And we've been warning about this for a long time, to be honest with you.
Duty bound to ask, has there been an expression of disappointment from the United States, from the White House?
I can tell you, once we get into that room, there's always a lot of noise around the meeting room and before and after. But once we get into the room, like I said, it's all about the raw data.
There is the proposition that, OPEC is on autopilot, and we've never been in more volatile times, and you're having some of the shortest meetings in history. You're doing the market a disservice.
Well, some might argue the other way around and say that we are actually doing the market a service because we have a very transparent methodology. We've been implementing it very clearly and very visibly and transparently to everybody's knowledge. The parameters that we analyze are very clear. Everybody knows expected what the plan is, and it's good to plan out to the market the increments that were planned out since July last year. Well, so the market has an expectation of what to do.
Well, let's build on that. We're going to September. I want you to cast it forward. Is there a willingness to do more than the 100,000 that you did at the beginning of August? Is the willingness growing?
Well, September 5th is when we will meet, and I think we've demonstrated time and time again over the past that we're willing to do whatever it takes to do what the market really requires. But I can't preempt and tell you from now what we will do, whether it will be an increase of more than 100 or not. It all depends on when we sit down and look at the market parameters again.
Let's go back to the noise. Do you think there's going to be more pressure from the US for you as a group to do more?
That I can't say. I mean, prices are coming off nicely for the interest of the US or whoever wants prices to go down. So the noise depends on, I guess, what price levels are acceptable to whoever will make that noise. For us, the noise really doesn't make us make the decision. The noise we are used to. I think what really counts is when we sit down and we look at the numbers.
Russia was in that OPEC Plus meeting. Did they lobby hard against a more substantial increase? I mean, was this the most you could do without fracturing OPEC Plus?
I think we have demonstrated again that we've been very close with Russia in this alliance since 2017. The Russians have played a critical role in supporting the stability of the market. And the meeting, as you said, was very short and swift. So that's a sign that there was no division. The decision was taken by a clear, unanimous vote. And it was, I think, in 15 minutes we were done and dusted.
But that's part of the argument, isn't it, when we caught up with Sahil Mazrui, which was people are questioning that you're not proactive, you're not on the front foot, and you have this almost pacifist role at the moment.
Well, I mean, in July and August, we went beyond the agreed plan. Like you said, it was a step up of 432 increments. And in July and August, we decided to be more proactive and move to increasing by 650,000 for both months. So I guess that's a sign that we are willing to be more proactive when necessary. And it's not just a fixed plan. That's the beauty of our monthly meetings, is that we can see and analyze and regularly evaluate what we need to do.
I think the drama has been taken out of it. I'll come back to that in a moment. I want to focus on global demand. You've had a front row seat in China. You've marketed oil in China. You've been there. There is this palpable fear about a slowdown in China this week. I think that's what's driving markets right now. Given your understanding of the market, how do you see Chinese demand? How do you see Pan-Asian demand? How weak is that, Secretary General?
I think it's being blown out of proportion. In my view, I mean, if we take the data that came out before yesterday on China, and it's all perceptions and fears based on polls and expectations. So what's to say that the polls were right? The polls were saying that industrial production in China would hit 4.6% for July. And the number came out, it was 3.8, but it was actually versus 3.9 in June.
But then I would say back to you that the credit impulse, the driver of growth in China is back at levels that we haven't seen in a couple of years. So I'll challenge you on that.
I think China is still a source of phenomenal growth. We haven't seen China open up exactly. There's a strict COVID zero policy. I think that will have an impact when China gets back to full steam. We're seeing additions of refining capacity in China, imports. I think also if you add to demand, it's not just China. You look at now the gas to liquid, gas to oil switching in Europe. This was highlighted even in the IEA report. Jet fuel recovery hasn't really picked up. So there are more elements to just China for the oil demand picture. And we are still bullish on oil demand for this year.
When China comes back, will it be fast and furious and then squeeze you even more?
Squeeze the market, maybe, not us. I mean, it's a global responsibility. It's not just on OPEC's shoulders, although many of our OPEC members are the major suppliers to China, Russia included. But I think it's a global responsibility. Again, it brings me back to the issue of investment and the importance of investment.
And in terms of that narrative of demand, I'll come back to investment in just a moment. The market is not just obsessed about China, but you look at a bailout of Uniper, a nationalization of EDF in France. We are on the doorstep of an energy crisis here, and sentiment is imploding. Give me your take. You've worked through a number of huge cycles. Does this look like, feel like, and can it become a major global recession?
I would warn against using a major global recession still. I think we're looking at growth levels, economic growth levels, GDP rates that are similar to historical levels for now. I think still, yes, you are right. We are on the signs of potentially an energy crisis. Coming winter, I don't know what it's going to look like. We're seeing utility bills going high, skyrocketing in Europe and in the UK, in Germany, and governments are acting to take that burden off consumers. And this, again, all boils down to the issue of investment. I think it's been investment, lack of investment, underinvestment, chronic underinvestment for several years is really what's taken us to where we are today.
OPEC's new Secretary General there, Haytham Al-Ghais, speaking with Bloomberg's Manus Cranny. Coming up, we get back to the conversation on the economy, both U.S. and U.K. after that hot inflation reading and ahead of Fed minutes. We'll speak to Sandra Horsfield, economist at Investec. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up, an interview with the CEO of Norway's Sovereign Wealth Fund. That's at 6:30 a.m. New York time. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Now, U.S. retail sales data out at 8:30 a.m. New York time will provide an indication of how consumer demand is holding up. Bloomberg Economics expects a modest gain as cheaper gasoline prices take the pressure off America's wallets. Sandra Horsfield, economist at Investec, joins us now. Sandra, what do you expect and how do you view the U.S. consumer right now?
This consumer, like others, is faced by surging inflation, and that's one of the markers that we're seeing in the retail sales numbers as well. We have to remember these are nominal figures, so price rises have inflated the figures that we had last month. In volume terms, we actually had a decline. So this time around, the expectations are for flattish, maybe marginally up, maybe marginally down figures in headline terms. That means further volume declines in retail spending, suggesting the crunch is on.
We have seen the personal savings rate come well down, now at just over 5% in the U.S., so far below the historical average. And also credit card debt increasing. Are consumers having to borrow more to spend?
I think that's part of the element. We have to remember that, like in Europe, in the US, during the pandemic, a lot of voluntary savings that had been boosted by involuntary savings. People put money to one side, so there is perhaps less need to save right now because the stock of savings that has built up is higher than had been planned to begin with. At the same time, those squeezed very hard may be forced into taking up more credit card deals if they don't have the savings to fall back on. So it's a mix of the two that is currently playing out.
I mean, I do feel like a lot of the strength of consumer has been pinned to that, right? Has been this continued savings from the pandemic. At what point, especially in Europe, does high inflation and energy costs start to eat into that and that narrative disappears?
I think that's an excellent question. The main issue we're facing is that these savings aren't equally distributed. So there are some households who have a lot of savings. These are likely to be the higher income households who wouldn't necessarily spend that much of them in the first place. Those who are squeezed at the bottom end won't have built up savings to the same extent. They don't have the cushion. And for them, the share of expenditure on food and on energy, that's where the largest share is. So that's where the pinch point is. And overall, that's what we think will ultimately drive us into a sort of recession, certainly in the UK.
Yeah, and it feels like a K-shaped recession if that's what it is. What does that mean in terms of fiscal policy? Of course, politicians often feel and do feel compelled to enact policy when we're dealing with things like high energy prices. In the UK, there's a leadership debate about tax cuts, whether they make sense or not. What is the approach that perhaps cushions some of that divergent fortunes?
I think every country is taking a slightly different angle and a slightly different emphasis. At the end of the day, it's about how do you shield those who can't deal with these sorts of cost pressures from the situation in the most cost-effective way for taxpayers. And the answer to that varies. Certainly in the UK, the leadership election is, as you said, about tax cuts. Otherwise, direct transfers are certainly becoming more and more discussed within the UK. We're seeing more of that in other parts of Europe as well. So it's a different response that you can get to achieve the same sort of aim.
All right, Sandra, thanks so much for joining us. Sandra Horsfield there, economist at Investec, talking to us about this big inflation print and the effects it should have on the economy. I want to break some news on the monkeypox virus. The monkeypox virus maker Bavarian Nordic, which is the only company with an approved vaccine for monkeypox, said it no longer is certain that it can meet demand. As cases continue to rise around the world, the company out of Denmark is now exploring the possibility of outsourcing some of the production, including a technology transfer to a U.S. contract manufacturer to help meet accelerating demand. Again, the monkeypox virus vaccine maker says it's no longer sure it can meet demand. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Also joining us right now, Tom Keene, co-anchor of Bloomberg Surveillance, the original. And Tom, we have obviously these retail numbers coming out. We've had earnings from some of the biggest big box stores in America, and you're focused on that with your single best chart.
We are Dana Telsey to join today to really wrap up what we see in retail. And of course, retail sales and economic statistic at 8:30. Before that, we get Target. And Matt, as you know well, given where you are from, there's a real habit in financial media to make all the big box sound the same. They are not. I mentioned this yesterday, so I thought I'd make a chart really off of what I was saying yesterday. Home Depot is the Apple equivalent. Home Depot is a stock that has never gotten love. It's not sexy like Apple. It's not sexy like Ducati, Matt. And there it is with massive outperformance of Walmart and Target. Target catching up wonderfully here in the last 5 years versus the persistency of Walmart, but it's the excellence of Home Depot that just sticks out.
Tom, boring is beautiful. Who do you have coming up on the show? Who are you looking forward to talking to?
Dana Telsey to get a real summary of retail. And frankly, as John Farrow mentioned, to dive into back to school and already the holiday seasons. We're going to talk to the gentleman from Norway, Nikolai Tangen of the Sovereign Wealth Fund as well. And David Rubenstein will stop by. And let me get out front right now. We'll be talking to him about his good interview this week and less about the uproar at his Carlisle.
All right, well, I'm very much looking forward to the program. And I hope at some point you all plan to get John Farrow a cowboy hat before you travel to Jackson Hole.
Lisa's in charge of that. We had a meeting yesterday. It's a 3-hour meeting.
It's important. It's important to get him a good Stetson for the $1 million cowboy bar. Let's take a look at the other things we're watching today. I'm watching the electric vehicle tax credits after this, the Inflation Reduction Act, so named, which really is more of a climate change piece of legislation, will actually reduce to zero EV tax credits at some point in 2023 for all the current models. Because of the way, Keith Lang from Bloomberg News has a great piece on this, because of the way currently EV makers are sourcing the components for batteries, they will get no tax credits, or consumers will get no tax credits for these cars in 2023. You'd think, and I assume, Danny, that EV makers are going to change the way they source materials so that they can continue to pass on those $7,500 federal tax credits to consumers.
Does this mean anything about your future of buying, I don't know, electric Mustang? Electric Ford?
Well, I have driven the Mustang Mach-E. I thought it was an excellent car, a little too racy for New York City streets, for the Manhattan potholes. But no, I'm going to stick for now with very large internal combustion engines, preferably without any kind of forced induction.
Fair enough. Well, what I'm watching feels boring in comparison, but it's not, Matt. It's the FOMC minutes. That's, of course, from the meeting 2 weeks ago. And look, it was really fascinating. The markets interpreted this meeting as very dovish. And then after that, we had Fed speaker after Fed speaker come out and say, look, we are still on this project of taming inflation. We will still go at it hard if inflation surprises to the upside. So it'll be interesting to see. Yes, he seemed a little bit dovish in the press conference, but what do the meeting notes say? Will they seem dovish as well, or will we get this consensus as we head into Jackson Hole that it's going to be jumbo rate hikes from here on out? Well, that's it from Matt, Kailey, and me for the early edition. Of course, Kailey's going to be back. More surveillance up ahead. This is Bloomberg.